So guys, in this video I want to show you how you all doing wrong when you opening the positions for 2 risk-reward ratio or even less. The point is you must understand where is the most vulnerable point of the price to give us the reaction. So what I mean by this is few things. First of all, you need to understand how the price reacting on the HTF POI. So what I mean is high time frame is always more important than the low time frame. And at first we need to understand what is the bias for today. So let's go to the daily time frame and let's see how the price reacting on some high time frame POIs. So first of all, what I want to see is some sort of the wait a sec. So first of all, I want to see how the price reacting to these areas like weekly FVG. So here is the weekly FVG number 2 and here is the number 1, and what I want to see the price is going all the way up straight to the all-time high, and I don't even care about this FVG over here. Why no? Because this is the FVG which was the reason of the reaction. So on reaction on what? On reaction of raiding all this liquidity, we get this inversion fair value gap, and now we're moving, let's say, in the downtrend daily. But that's so wrong because the bias is maximum bullish. We're in the all-time high area, and the all-time high is so near us that this is the sort of manipulations that makes for you people to think that, oh, we are going so bearish now, and I'm looking for the shorts, but that is wrong. So what I want to say, is, first of all, we need to understand what is the high time frame bias. The high time frame bias is obviously bullish, and what I want to see the price is reacting on the weekly time frame, FVGs, on some order blocks, but I don't use them usually. I want to see the price to react on this low, on these highs, on these lows, yeah? And I want to see the price to show me some strengths to go long. So the second thing I want to say is, now I want the price to get into these areas and show me some sort of reaction. So first of all, this is the start of the daily FVG, of the weekly FVG, sorry, and this is the high of the previous week. So basically, this is the first level, let's say, yeah, level number 1 is previous weekly high, which is very strong point, and this is a really important place on the graph to get the reaction from. So this is number 1. Number 2, this is a daily FVG. So what I mean is the price at the same time getting this fractal inside weekly and inside daily fair value gap. That means that this is the most important point of the day where we can get the reaction. Otherwise, if we are not getting the reaction, we can go long. But what I want to make is to get into the position with the high risk reward, like 20, yeah? 20 risk reward. That sounds crazy, yeah, exactly, but sometimes it can be 10, it can be 5, it can be 18, whatever. I mean that with lower risk putting into your position, you can still make a lot of profit just using this strategy. It's easy. So the second thing I want to say you is, after we rate this high, not sweep, yeah? We not sweep this liquidity, we rate it on the high time frame, on the low time frame as well. I want the price to show me some sort of accumulation on the high. So basically there is no such a model, yeah, that you can use, because it's going to be hard for you to understand if this model is correct, if this model is going short. But what I want to show you is that the price is making some sort of accumulations. Every high and every low is like, you know, it's not swallow, it's getting closer and closer. So that means that the price is preparing for the move. But for the what move can the price be preparing? After getting the previous week high, after getting into the weekly time frame FVG, and basically what I want to say is this is the first answer to how you can enter the trades after you see the weakness of the price. And this is this high over here. This is long-term high. This one is intermediate term high. And this one is short-term high. Why so? Because the price is not getting much power to get all these highs, but it's getting enough power to make a break of structure over here. Yeah. This is not the break of structure, this is sweep of liquidity, but the graph can be ideal, it can be perfect. This is also not the break of structure, but these highs are not taking. So what I want to say is, this is equal highs, this is the future liquidity I want to take, and this is the points I will target later when we got this huge correction. And what I'm doing here is, I'm getting short from here straight to here. I will show you where. So where I want to see my correction. Exactly, I want the price to rebalance, for example, the 0.5 points of my impulse. Yeah, so this was like, this was a hard long move and it was all day long. It's not rebalancing the price at all. So I want the price to rebalance 0.5 points, and this equilibrium is synchronizing with this high time frame POI over here. This is our inversion fair value gap. This is the daily wick. It's gonna be closing in how long? In 10 hours. So after 10 hours, our wick is possibly can be somewhere here, 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 or here. But the point is, I don't want the price to be somewhere here after the day closing. I want the price to stop here and make us a new fair value gap, which is inversion. After that, I want the price to test it, synchronize it with this 0.5 level, synchronize this with this inversion fair value gap of daily time frame, and I want the price to make me some sort of model on the low time frame, and I enter long all the way to the all-time high. This is how I'm working. But by the way, for now, I'm in this position, sitting and not even move. So I'm waiting the price to rebalance it. But what's the point? What's the point? Let me answer. This is so important, guys. If you use it, you actually become much more profitable than now. There is a rule. You always use 1% of the risk. You always trade 1% per day. You don't go to the trades when you get stop loss. That's correct, no problem. But you can do other way. So what you can do is, you can basically go into the trades for 0.5% of the risk, 0.2% of the risk. It's easy. Why so? Because after I entered this position over here, I'm understand, this is not the position you want to take daily. I mean, you want, but there is no confirmations in this type of trade. Yes, exactly. That's why I'm risking 0.2%. So basically, I'm putting 0.2% to get, how much can I get? To get 7x. So basically, with this type of percent, I'm getting almost 10 times profit. But the most important part is, I always getting more. So I'm not into 0.2%. I'm always getting more over here, here, and over here. So now, after I add more positions, this is basically my positions, which I took now. So I'm now in this long. Actually, this long was fixed over here on this low, and this position and this position is still running. But what's the point? Here is 0.2. Here is 0.2 and here is 0.2. 0.6% was put into this position. Here is 3 risk reward, here is 6, and here is 5. So almost 17 risk reward ratio. Oh no, not 17, I'm sorry, like 14. 14 RR, yeah, is been taken in this position. What I'm saying is, with 0.6% of the risk, this is the best risk reward ratio you can take. The best. And your targets are so close to you, your correction is not even that hard type of corrections you're looking for. And you need to feel yourself on the market. You don't need to work like a robot. It's not about this. The biggest and the most, powerful trades are taken when you respect the market and it respects you back. And by respect, I mean that you really believe into your watchness, yeah? Like how many times you look into the graph, how many times you feel it about the graph, how many times you was watching the price going up or down. And that's how all these good results are taken. So this is the type of position I took on Germany 40, and I'm not saying that this is something that you can guys use from the start, yeah, from the beginning. Of course, you need to watch on the graph, you need to get low key to it, and you need to be prepared. But the point is, don't try to be a robot. Just try to feel the market, try to enter the position how you want, not risk it all. Don't try to risk it all like 1% per day. Try to risk 2%, but in many trades, and spread it. And that's gonna be one of the most important parts of how you can run a high risk reward ratio. Thank you guys. All this stuff will be written down on our Discord server, and it's a pleasure that we already have like 40 subscribers on our Instagram, because we're only starting and we're planning to go big on US market. So it's nice to see you guys, and I hope these trades play well. Bye bye.